Do we have the risk of adding to the anxiety with these earnings from NVIDIA tomorrow, or do we, subdue them for a bit if this report turns out to be what many think it will be?
I think we subdue it because, again, NVIDIA's at the top of the mountain. I think the earnings are going to be good. The cash flow is going to be amazing. And I think more importantly, I think Jensen's going to talk about guidance and what's going to happen into 2026, especially considering everything that's happening with chips and the like. And I think this is going to be a major calming event with respect to AI overall.
As we assess really what NVIDIA is going to mean, Malcolm, to this market, the stocks had a huge run into the print. Does that raise the bar to a degree or not?
I don't think so. So historically, NVIDIA shares don't do a ton the week their earnings come out. Right, on average, the last 4 earnings from them, we saw something like a 3% move. But I do think it's interesting that the options market is now expecting about a 6.5% move after this particular earnings print by the end of the week. So that could be an all-time high above 191 on NVIDIA shares if that actually comes to fruition. But then obviously that cuts the other way. If the earnings disappoint, we're now talking about a slide. And so I think that it's important. It probably is going to reaffirm what we already knew about the AI trade, just based on the fact that Amazon, Microsoft, and Alphabet all reported that they're going to continue their CapEx through the remainder of this year that they committed to back in January. So that has to bode well for NVIDIA since they control 80% of the global AI chip market.
Thomas, I want to come straight to you on this because, like we said, the expectations are really high.
Yep.
A lot of people are anticipating this. What are you looking forward to hearing?
I think the name of the game is going to be guidance. I think everyone expects the numbers to be good on top line and bottom line, but the stock is near price for perfection. So that guidance on China is going to be critical, 10-15% of revenues and earnings moving forward, and the outlook. Because the bottom line is, believe it or not, the best thing that could ever happen to NVIDIA is that the Intel deal succeeds. So NVIDIA's revenue growth rate has decelerated, not for lack of demand, but for lack of supply. They only get a limited allocation from Taiwan Semiconductor. They need excess capacity of production of advanced chips. And this $10 billion deal, the 18A node in Arizona, is going to be critical because all of the designers, what people don't realize, that their business models rely on the kindness of strangers, okay? If Taiwan Semiconductor ceases to exist, NVIDIA ceases to exist. So we need Intel to have that advanced production, and that is the dark horse in the semiconductor play. And NVIDIA, watch the guidance. The numbers should be strong.
All right, by now, NVIDIA reports tomorrow. Of course, everyone remains on edge. Here's the thing. There was a time you could bet heavy on this going into the report. Look back, this is maybe a few years ago, but big moves in the week after, huge moves. Now, it's been the exact opposite. Over the last 4 quarters, 3 of the last 4 quarters, the stock has been hammered after they've reported. Now, my next guest says the stock is a buy, in fact, recommending a buy, likes it to 206, a 12-month target. I want to bring in CFRA Research, their Senior Vice President, Technology Head, Angelo Zino. And Angelo, the stock has struggled here recently after posting results. So 2 things, right? There's always the earnings and the guidance, and there's always the street's reaction or the market's reaction. Your thoughts?
Yeah, so thanks for having me, Charles. And listen, I think there's some digestion definitely going on in the stock here. You've seen essentially NVIDIA's stock more double here right off the April lows. So it's had quite a run here. You've really gotten the street's really gotten bulled up here over the last couple of days and weeks, increasing target prices and their estimates ahead of this event. And that's really happened, maybe to your point, over the last year. And that's kind of taken some of the mojo out on the post earnings reaction. Right. So when we kind of think about the expectations here for NVIDIA, we expect another, beat as far as the quarter is concerned. In fact, we think the bar is low here for the July quarter. For the October quarter, that's really what it all comes down to as far as the guidance is concerned. There are 2 really important things I think investors need to keep an eye out. One is margins, gross margins. We're looking for 72% here this quarter. The company, essentially alluded to the fact that as Blackwell ramps, you're going to get a ramp up here on the margins. So the expectation is 73.5% in the October quarter. They need to meet that number for the stock to continue to work, after they report. And then China, I think, is the other key. What they have to say about the trajectory of demand for China is going to be extremely important, not only for this quarter, but going into calendar 26.
So, and for this quarter, we're looking at not the gross margin, but operating margin down maybe slightly from a year ago. Cash flow down slightly from a year ago. But again, we're talking against monumental growth, right? So to go from 122% to 53.5%, it's not bad. I don't think it's something. What I want to ask you about is automotive, because I keep reading and hearing that if we go further down the road, this is going to be such a key component of the business, and it's not getting enough ink right now.
Yeah, no, you're absolutely right. I mean, but when you start thinking about it, right? I mean, automotive was really talked up about 2-3 years ago from Jensen about talking about it as being the biggest growth opportunity for the company long term. But when you think about it now, it's only 1% of sales because the data center business has just done absolutely phenomenal, right? So, but there is still a greater opportunity, we think, tied to both automotive as well as robotics. Over the next couple of years. You're probably talking about more of a 2027, 2028 event. But when you think about what's driving automotive today, not only for NVIDIA, but the broader semiconductor industry, it's really what's going on in China. China has really been kind of an early indicator to really higher demand in terms of AI capabilities inside the vehicle. Western markets have not yet caught up or really seen that momentum yet. Again, we think it's probably 2 or 3 years down the road before we really see that take off. But it is a massive opportunity, both on the hardware side as well as the software capabilities and a recurring revenue stream that you can see, that is going to be worth multi-billions of dollars per order, for instance, what we saw earlier this year with the GM contract.
And to that point, Jensen is so far ahead, right? I love last night he brings out the Jetson Thor chip, right? Talking about physical AI, and it just gives you something as an investor to think about, not with just tomorrow, even with the fall quarter, but the year next year, the year after that, the year after that. This, of course, tied to robotics. Now, coming into the year, 2025 was supposed to be the year of the humanoid robot. It feels like it's not living up to the hype yet.
Not yet. And again, we think it's going to have a longer tail. It was something that Jensen definitely kind of boosted earlier this year, and something you're going to continue to hear a lot of talk about, but it's going to take time. Our view was 2025 and 2026 was going to be the year of AI agents. The way AI works really is you kind of need to crawl before you walk, and it's got these kind of steps along the way. So Gen AI in 2023, 24, AI agents in 2025, 26, and we think 27 and beyond, it's going to be the physical AI world. And what this Jensen Thor offering really does is it throws compute AI capabilities at the device level, but at the same time, you're going to need to continue to grow and evolve that data center opportunity. That's not going to stop as you continue to get kind of AI at the device side of things. So there's going to be a total addressable market opportunity that continues to grow for NVIDIA and others across the semi ecosystem.
As we look ahead to NVIDIA earnings, uncertainty around its China business is an overhang after reports that NVIDIA has halted production of its made-for-China chip. Christina Partsilevis has more. Hi, Christina.
Hi, Courtney. Well, for NVIDIA, the China story is less about what just happened and more about what comes next. The company's latest quarter will almost certainly show zero revenue from China after the H20 export ban, which is a stark contrast to the estimated $16 billion backlog that Oppenheimer said existed when the ban hit back in April. The stock is definitely trading near all-time highs. Right now it's at 181, but you can see it's up 35% year to date. But it faces just this critical test. Can management provide any visibility on China's return? U.S. officials began granting limited licenses in August, but with the quarter ending July 31st, analysts don't really expect any immediate revenue recognition coming from China. Chinese authorities are also simultaneously pressuring domestic firms to buy local alternatives like Huawei chips instead of NVIDIA chips, just as NVIDIA is trying to restart supply. Recent reports also suggest NVIDIA is already slowing H20 production due to this pushback, though the company only said, quote, it constantly manages supply chains to address market conditions. Vague, but they're not denying it either. The wild card, though, is NVIDIA's new B30 chip designed for China, with speculation that President Trump's administration could approve exports of these even more advanced AI chips for China. And that could mean today's muted H20 revenues gets replaced by a much larger B30 sales down the line. And this market's worth about $50 billion in opportunity. So definitely something investors are paying attention to.
It takes us to our talk of the tape, the next leg of this record-setting rally. It's clear where our headliner stands on that topic. He's bullish, as you know. He is FundStrat's Tom Lee. Joins us now post 9. It's good to see you.
Great to see you, Scott.
NVIDIA looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I mean, I know investors are really anxious, and NVIDIA has not performed well the last few times it's reported. But the story arc there remains that that is one of the most important companies in the world in the middle of the biggest structural change in the world economy. So I think NVIDIA still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top. You know, from Sam Altman at OpenAI saying that, you know, investors are a little overeager about AI. You know, Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models, AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, you know, beyond just Figment. And I think, you know, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
It's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's a bigger upside in owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. Critical earnings report tomorrow from NVIDIA. How are you thinking about that? A bar that's been raised by a stock that's up near 40% over the past few months into this print.
Well, not only is it up 40% over the last few months, it's up over 90% from the April lows. And, you know, just kind of going into the result tomorrow afternoon, you know, the valuation is higher versus the last couple of prints, you know, about 6 turns higher on the forward earnings multiple. And earnings estimates have risen about 11% just in the last few months. You know, and there's more of a tricky kind of setup as it relates to what kind of guides we should be expecting. And really, the open question mark is China-based revenues. Or will they enter into the Q3 guide or not? I think that could be potentially up to a $3 or $4 billion swing factor in terms of the number that's posted. But this might be one of the setups and reactions where what's on the press release might not match up in terms of what's discussed on the call in terms of what type of recovery timeline investors should be expecting in terms of reintroducing China revenues back into the fundamental story for NVIDIA.
Tom, you want to just put a bow on that, reacting to that?
Yeah, I might say that investors have been now patterned and bracing for NVIDIA to sell off after they report tomorrow. And yet, I think the visibility and I think the conviction on AI is actually stronger. So I think there's a chance NVIDIA rises dramatically after they report Wednesday after close.
Okay, that's a bold statement from somebody who's not afraid to make them. Tom, thank you. Liz?
What about NVIDIA as a sign for the overall market? I mean, whatever their results are, clearly people have big expectations for NVIDIA because of how well it's performed up to this point. Even on strong earnings and strong guidance, sometimes the stock goes up initially, sometimes it goes down. How should investors interpret the way those results are received, however good they happen to be?
Yeah, so we talked about this last quarter when they reported. NVIDIA had a record of reporting these great results and selling off on the news. Last quarter's earnings report, the stock, you know, performed well and kept going from there. And that was a sign that investors, that year-long consolidation period was over. Now we're up 40% since that last earnings report. So expectations, like you said, are high. I think if you see a subdued reaction to NVIDIA, that would be more positive for the broadening out rally. Whereas if we get NVIDIA do, rally and then continue going from there, it's going to suck some of the oxygen out of the room for the rest of these stocks.
So it's positive for the broadening out rally if the reaction is subdued, not negative for everybody.
Right, I think so. I think you could say that. You don't want to see NVIDIA have poor results and fall sharply, but a subdued reaction. We have high expectations. The trend this earnings season is for stocks to not necessarily react real positive, even to strong results. So I think in NVIDIA's case, it would just be a continuation of that trend.
Joining me now is Aaron Raker, equity analyst at Wells Fargo. He's got an overweight rating and a $220 price target on NVIDIA. Aaron, what's it going to take to get this stock to move up that 6%, you think? And how do the China restrictions and some of the softening of those factor in?
Yeah, thanks, John, for having me. So, we like the NVIDIA story. So I think as we look at this, it's all about the durability of demand, the visibility they see going forward. Obviously, the China discussion is front and center, given all the news and the flow around the H20. And I think on that China debate is, what are they seeing in the China customer base? Are the halts in China that have been widely reported, taking effect? And then I think over time, where do we go beyond the H20? Do we have a B20, a B30, and successive generations that they expect to sell into that important market? As a reminder, that was $8 billion of a headwind this last quarter. And, I think the expectation is that starts to come back, over these next couple of quarters and certainly into next calendar year.
How much of that China benefit is already priced in, given how the stock has risen after the Trump administration eased up?
Yeah, I think from a multiple basis, we're comfortable on this name. I still think this is obviously a platform story, hard to compete with the breadth and depth of their product portfolio. So trading at a kind of mid to high 20 multiple on our calendar 27 estimates still looks attractive to us. I think as we look forward, we have seen estimates move higher. We've seen, for example, calendar 26 estimates have moved up by about $9 billion plus on a revenue basis. So I think some of this is getting factored in. I think it's just addressing those demand dynamics that they see going forward and the sustainability of this demand as we look into calendar 26 at this point.
Given what we heard over the rest of earnings season previous to this from the hyperscalers talking at Amazon, Microsoft, Google about their infrastructure plans and really particularly from AWS about their supply constraints, what kind of commentary could we get from NVIDIA that sheds light on what they're prepared to deliver there and what we're seeing from demand that could make a difference and incrementally inform investors?
Yeah, I think from an NVIDIA perspective, important to remember, they only guide one quarter out. So they're not going to have a defined guide looking forward. So the qualitative commentary comes to that visibility shaping. When do they see or how do they see the supply dynamics playing out? Can we read into some of the metrics around what they're seeing on inventory builds and, also purchase commitments as a forward indicator looking beyond just this current quarter? To your point, cloud CapEx, when we look in aggregate, we saw about a 25% increase in cloud CapEx for the calendar 26 estimate. So now the debate starts to shift out even into 27. And, I think that's where just the kind of the demand profile looking out beyond this next quarter is going to be important. And you get into sovereign AI, enterprise AI adoption around agentic, and just the longer tail opportunities for NVIDIA going forward, I think is what people would really be focused on.
Expect to hear anything about competition?
Yeah, AMD is highly debated, right? Also, internal silicon efforts at the hyperscalers. I think that'll be a topic of discussion. But, I think we're going to come out of this earnings sprint continuing to view NVIDIA as the dominant provider of these GPUs. And again, as I mentioned, like sovereign AI and some of these enterprise opportunities are still largely in front of us.
All right, I hope you're all doing great today. I'm going to cover most of what I covered in today's first video in case you missed it, because I want us all to be prepared for NVIDIA's earnings. But before I do that, I'll briefly mention Jetson AGX Thor since it was brought up in one of the clips you just watched. Yesterday, NVIDIA announced general availability of Jetson Thor, and this has massive implications. I'm not going to spend much time on this today, but the bottom line takeaway is that this will enable multi-AI, real-time, on-device inference on the edge in demanding applications such as surgery assistance, agriculture, and many more. In other words, this will allow robots to have intelligent interactions with humans and the physical world in ways that were previously unfeasible. This is a very big deal, and NVIDIA is going to play a massively important role in the oncoming wave of physical AI. Over 2 million developers are already building on the NVIDIA robotics stack, and I seriously think that AI robotics is going to be a major revenue source for NVIDIA in the years ahead. Now let's cover today's news, and then I'll cover NVIDIA earnings after that. Today, NVIDIA announced in a press release that many leading global enterprises have adopted NVIDIA's RTX Pro servers. Jensen spoke earlier this year about how most of the world's enterprise IT had not even implemented AI yet, and he believes that bringing AI to the world's enterprise IT is an opportunity worth hundreds of billions of dollars. And today, we have additional confirmation from NVIDIA that they are moving forward and capitalizing on that opportunity, which is great news. Now let's get ready for NVIDIA's earnings this Wednesday. According to FactSet, the consensus estimate for NVIDIA's adjusted EPS is $1.01 on revenue of roughly $46.1 billion. We have seen many analyst price target upgrades just recently as we get closer to earnings. This raises the bar for NVIDIA even higher than it already was. I think NVIDIA is likely to report great numbers surpassing analyst estimates. At the same time, I have no idea how the market will react to the report. I think there will be 3 main areas of focus on this earnings call: margin guidance, the China situation, and the production ramp of Blackwell Ultra. I'll just briefly touch on each of these. I think we will hear great things about the production ramp of Blackwell Ultra, progress on Rubin, and I think NVIDIA will reaffirm their product roadmap, which will be very positive for investors. Last week, while visiting Taiwan, Jensen said that Blackwell Ultra is in full production and ramping strong. Also, CNBC received a statement from NVIDIA not that long ago saying that Rubin is on track. And so that is the main thing to keep in mind. Production is going well, and the long-term thesis remains intact. Now I want to briefly mention margins and the China situation. At the moment, most analysts are not factoring any China revenue into their models. That means that if company leadership tell us to expect China revenue in Q3 or Q4, then I think that will be viewed by market participants as a positive surprise. That said, the re-entry of China revenue introduces questions about margins. NVIDIA's margin on the H20 was already lower than their main data center products even before the 15% revenue cut. And now, even if NVIDIA raises H20 prices by 18%, as is being reported, they will still have a lower profit margin on the H20 than they did before the 15% revenue cut, even with an 18% price increase. If H20 sales were to return to their previous run rate in the near future, then we could reasonably see the H20 create a drag of 1 or 2 percentage points on NVIDIA's overall gross margin. That doesn't sound like a lot, but 1 or 2 percentage points on gross margins is a lot when we're talking about tens of billions in revenue per quarter. That being said, we have to remember that NVIDIA told us earlier this year that margins would return to the mid 70% range late this fiscal year after Blackwell has ramped, when they originally said that we did not have 15% of China revenue going to the US government. Now, NVIDIA is usually conservative in the guidance that they provide, and so it is reasonable that they may have been slightly conservative in their original forecast of margins returning to the mid 70% range. With this in mind, even with a drag on gross margins of 1 or 2 percentage points from the H20 situation, I think it is reasonable that we could still see gross margins return to the mid 70% range as NVIDIA originally forecasted. If NVIDIA were to confirm this on the earnings call, then I think market participants would view that as a positive. But here's the thing. There are still more questions about margins because Jensen confirmed last week in Taiwan that there is indeed a new chip for China. Now we have new questions such as, what will NVIDIA's margin be on that new chip? Will the US government allow the new chip into China? And if so, what will the US government demand in return for that new chip being allowed into China? I do view China revenue as additional upside to what is already a great long-term setup. And any China revenue will be viewed as a positive by analysts since they are currently not factoring it into their models. At the same time, a new chip for China brings us back to the question of what impact will that new chip have on NVIDIA's overall gross margin. I think this will be a key point of focus on NVIDIA's earnings call. Now, putting the China situation aside for a moment, I think NVIDIA will report strong results and provide positive updates on Blackwell Ultra's production ramp and the rollout of Vera Rubin in 2026. I seriously think that NVIDIA will reaffirm the long-term thesis on this earnings call, and that is the key for this earnings report. The long-term thesis will be reaffirmed as company leadership reassures market participants of the company's strong demand and strong production ramps. Now, what should you do ahead of earnings? I am not a financial advisor, and so I cannot tell you what to do. That being said, I will share some thoughts to consider that I think may be helpful to you. First, is this position a long-term investment or a short-term trade? Once you have an answer to this question, the decision-making process becomes much easier. If it's a short-term trade, that can be a more complex situation. But if this is a long-term investment that I intend to hold for the next 5+ years, then I personally would rather hold through earnings, go through the earnings report, listen to the earnings call, take some time to process the results, and as long as nothing has fundamentally changed about the company in a negative way, then I have no reason to sell. It's that simple. Now, when it comes to short-term trades, I personally don't like to hold through earnings because I have no idea how the market will react to the earnings. Again, I cannot tell you what to do because I'm not a financial advisor. That said, I do want to provide a friendly word of caution when it comes to holding options through NVIDIA earnings. Whenever NVIDIA reports earnings, IV crush is usually very substantial the day after NVIDIA reports. What does this mean practically? Practically speaking, volatility usually rises leading up to NVIDIA's earnings report. And then the day after NVIDIA reports earnings, volatility usually falls off a cliff, pulling option premiums down with it. This is what's known as implied volatility crush, or IV crush for short. IV crush is no joke, and it is usually very substantial the day after NVIDIA reports earnings. And so for me personally, I do not want to hold any options contracts through NVIDIA's earnings because the IV crush is usually very substantial. And again, that's just my opinion, and I am not a financial advisor. If you need help with your situation, consider reaching out to a certified financial professional who can help you with your unique circumstance. In summary, here's what I'm thinking heading into this earnings report. I am bullish on NVIDIA long term, and I view any China revenue as additional upside to what is already a solid long-term setup. Market participants will be focused on what NVIDIA says about margin guidance and their China strategy. I expect NVIDIA to calm any worries about the production ramps of Blackwell Ultra and Rubin. I expect NVIDIA to report very strong numbers that reaffirm the long-term thesis. And at the same time, I have no idea how the market will react to NVIDIA's earnings in the short term. From the perspective of a long-term investor, the important question to ask is whether or not the long-term thesis remains intact. If it does remain intact, then that takes priority over any short-term fluctuations in price. I continue to be bullish on NVIDIA long-term, and I seriously think this company still has a lot of runway ahead of it, regardless of how the market reacts to this specific earnings report. Blackwell Ultra is ramping strong. Rubin is on track. We have Rubin Ultra in 2027, and then Feynman in 2028. We have a clear data center product roadmap extending into 2028, and Jensen believes the world's computing CapEx will reach $1 trillion annually by 2030, meaning he's expecting growing AI demand and an expanding total addressable market underpinning all of this. That is the main thing to keep in view. The thesis remains intact as we continue to see growing AI demand. I think NVIDIA still has runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.